Right, excellent. How's everybody doing?
Morning, Alex.
Hello.
Couple.
Good, we're
Morning, Alex.
connected. Hello, hello. Yeah, it took a while there to connect, but yeah, for some reason. But anyway, we're done now, so that's good. Connected. Yes. Oh, oh dear. Right, let's get this going on, and let's pull this, let's stretch this up there. There we go, like that. Let's get the old chats going on as well. Let's get the old links going for YouTube. All right, this is good. Okay, this is gonna work. That's better. No, that's not the one. Let's go back here to another one. Oh, here we go. This is the one. Let's get the old chats going on. With feedback, it gives us feedback. It's a bit delayed. It's very strange when you listen to your own voice. Let's get that in there, and there, and here, there. Oh, no, the old in general. We are live. Done. And we can share it here as well. Okay, that's on. That should be working now. Yeah, I think YouTube's pretty decent. I think having one or the other tends to work quite well. Good, good. So that's on. All right, we're looking at gold at the moment. What are you guys looking at? What have you been looking at? Anything good today? Off the back of yesterday, I don't anticipate there being massive moves. I'm looking for some small moves at best.
I was looking at Euro USD, and then basically you posted what I was looking at, so felt pretty happy with that.
Okay, see that's interesting. I want to go over the euro because people were talking about it yesterday.
If there is extra time, Alex, I know you don't trade it, but could you look at Euro GPY and your opinions on that? Because it's pretty, like, I'm not trading anything. I'm not trading it at the moment, but it's like, I'm confused with it. It's a bit in the middle of nowhere, and I have no clue where it would head next.
Euro yen.
Yes.
Yeah, so
And
follow it alongside either pound yen or euro dollar, and see if it's a euro move or a yen move. It's one of those pairs that moves. Where I saw it last few days, it was moving with the yen pairs. So I noted dollar yen, pound yen, euro yen were all moving together,
okay.
and yeah, that's what it was doing. So it's one of those that you can take a trade on it, but I'd take it alongside a euro move or a yen move or a pound move, or not pound move, a yen move or euro move. That's it. It's not one of those I generally trade on its own. It needs to be moving alongside something else. So you need to establish whether it's a euro move or pound move, euro move or yen move. Yeah. Keep it simple. Correlations are so important in trading. Everything is linked. Everything moves. Because of something else and something else. So like, if it's a dollar related move, you need to look at the dollar index. If it's something to do with the pound, then you need to look at pound pairs and see, understand what's happening with the pound, and certain things like that just help really. Yeah. So having a few monitors, a few screens, that helps. That certainly helps. But having some sort of tweet deck as well, something to see what's happening with the news. That will help. Just certain things that you just need, the certain tools of the job. If you're just trying to trade off your phone, for example, I don't think that's going to cut it. If you haven't got anything else, you're trading blind and very limited. You're limiting yourself, and yeah. So I think a lot of it will come down to common sense as well. Hopefully that does make some sort of sense. But yeah, certainly with euro yen, look at what euro yen is doing with regards to yen pairs and euro pairs. Okay, so one moment, just typing something out. Any other questions? We can have a look at that. We'll have a look at euro dollar, and then we can have a look at the euro yen. So let's. Gold. Gold is still bearish as well. We have dollar CPI news in 15 minutes. Could be a mover. Yeah, certainly. Yeah. Good morning, YouTubers. Hope you're well. Let's see what's happening up here. Right. Let's get some. Make sure that we're on there. Yep, we're on there. We're on there. We're on there. Excellent, excellent, excellent. So everyone's logged in. Chat's there. You guys, let's have a look at what you guys are talking about now on here. So let me see. So I have a problem. I can see everything I want to out of the chart. Just kind of at the trades when it's at my entry. Then it's already 20 pips in profit, and I'm like, no way, I'm taking it now. Yeah, I know what you mean. It's because you've got battle scars, and you've been trading for long enough, and so everything just has to be just perfect, almost, in order for you to justify taking a trade because of what can happen. And if something has moved 20 pips or so, and you think, oh, I should have just jumped in, but why didn't I? Then what you need to do with that, you need to tighten up your trade plan and your risk management as well. So if you're saying, okay, I'm risking 0.5%, am I comfortable with that? Then you have to lock that in and say, okay, I am comfortable with that. I'm going to risk 0.5%. I'm going to be happy and okay. I'm going to not have a sleepless night if I do lose. You know, you have to make peace with certain elements of your trading. And so then when you do see the setup, pull the trigger. Don't allow it just to move. And then even if it does move 10 or 20 pips, then have this is why we say stick to 1 or 2 or 3 pairs, because then by doing so, you're familiar with how it moves, how much it moves. Look at the average daily range. Look at where it is, where it's moving to, where it has moved. You know, size it all up, and you can make an informative guess, if you like, or an informative decision based on your information that you've got because you've been trading it for long enough, and you know better than to either take the trade or not take the trade. You know, you know. So logic will take over, and automation will take over, as opposed to feelings. So if something has moved 30 pips, but it's still got a potential for another 100 pip move, then you're like, okay, yeah, I can jump on this. And my stop loss is going to be 30 pips or so, you know? And stuff like that. Because otherwise you'll just watch it move and you think, I should have taken it. And then it moves another 20 pips, 40 pips. You're like, oh, bugger, I didn't. So then the MT strategy is important. That the MT strategy will help you with the trade, will help you with jumping into that position and saying, okay, look, it's moving in the direction, it's doing what I want it to do. Great. And the other thing is, like, if you're just walking in now and it's just moved like 30, 40 pips, then there's this whole fear of missing out. You're going to be like, I want to get on this. Maybe put 1/4% down until you've formulated your trade plan, until you've sort of done your back testing. Ideally, so like with gold yesterday, looking at gold, I've been talking about gold. I've been stalking gold. I trade gold. You know, it's one of mine that I trade. It's on my watch list. I know what it's doing. I know what I want it to do. I just had to be patient, and then it did what I wanted it to do. So I'd already planned it. I've actually, with the podcast I did on Sunday, I believe, we talked about letting our winners run. That was really important because it talks about how we manage our trade, what we do to manage ourselves, and just certain things. You've got to take some action. So there are things you can do. It's just about getting into some form of comfortable way of trading that you can apply every day, day in and day out, without overcomplicating it. So you're avoiding that analysis paralysis. It's like now, look, we've just had a 100 pip spike down on this 1 hour candle on gold, still bearish, but look where it's come down from. It's done a massive move to the downside. We're testing the lows and trying to break down through the lows. Am I going to jump on this and short it? No. Is there like an urge in my body, like, part of me saying, why are you not on this? Yeah, of course, it's just natural. Even if I was done for the day or not trading, there's still going to be a certain element. But I find that if you make money and you've made some profit, you feel better. It's like feeding the addiction. So you have to understand that. You have to make peace with that. Of course, you're going to get frustrated. There's emotions going off all over the shop with this. It's just the way it is. Ah, dear. It's the process. It's part of the process. So you need to have a process. Get your process in order. I can help you with that. Definitely. Because you're gonna be like, the more you trade. It's funny when you start out trading, you're very naive to losses. You know, one of my pals was like, he started trading, and sort of 3-4 months in, he was increasing his lot sizes. He was flying. He was absolutely killing it. And I was like, yeah, but you wait until you lose, because it will happen, and then it'll be like, boom, it will hit you, and you'll be like, oh, and it almost stops you dead in your tracks. And all that fearless trading that you were doing, and you know, having win after win after win, and increasing your lot sizes and trading with enormous amounts of risk. It's almost like when these new traders come in and they take these FTMO challenges and they pass in 3 days. It's almost like that. They're absolutely annihilating it. And then something will happen, and that's it. Boom, done, end. That was it. They've got no backup plan because they haven't got any experience beyond that. So they don't know what to do. So that's the process. That is trading. That happens to everyone. Maybe not in that particular order, but definitely and most certainly it happens to everybody at some stage. You want it to do it. You want it to happen as early as possible, because then the earlier the better. Then you get it out of the way, and then you can kind of hopefully grow from that experience and move on. But certainly the person that I'm talking about, he doesn't trade as crazily as he was doing, because he had a loss that wiped out a massive chunk, and it just put him on the back foot, and then he just viewed trading and viewed the whole thing in a whole different light, and it was traumatized. It was almost like, oh, I wish I hadn't seen that. So we always refer to that starting point and say, wouldn't it be nice if you could just trade without no fear, without that fear or emotion like you did when you first started? Wouldn't it be nice to apply some of that? And then I say, isn't it funny? You see it happen all the time, especially with these new traders trading FTMO, and then they pass the first part of the challenge, and then they screw it up on the second part. Yet the second part statistically is easier to do than the first part. And that's that's just part of the game, and it is what it is. I mean, look at this move on gold. You know, it's just tearing on down, making a new low, and it's going for that. It's going for that zone. It's going for 1763 area, a 50% retrace, which was tested and bounced off there perfectly. You know, we talk about fibs, primary form of support and resistance. You give your fibs precedence above all else. Forget your fancy order blocks and all the other stuff that's there. It's all secondary. You don't make them primary. Primary support and resistance are your fibs. First and foremost, from experience, they will tell you how accurate they are, because it's a thin line. On one level, it's pinpoint accuracy, precision, on point. Whereas all the blocks are like this order block I've put here, supply and demand zone. Let's just look at that for a second. Let's just see, how big is that? I mean, and it's very subjective. It's totally subjective. Some people's might be a lot bigger than this, or a lot smaller. You know, what are their rules? Their rules might be, well, we'll look left on the chart and we'll say, right, we've got to use the wicks, and we'll make sure the wicks are covered, but we won't go into the body of it. And I'll be like, okay, whatever. You know. So let's look at that. So we're looking at where's it, 81 to 50. So we're looking at about is that maybe 200 to 300 pip order block? Yeah. So the word zone it means exactly that. So how can I use that as a primary place to sort of buy and sell off? I'm looking at a 200 to 300 pip box. What the hell am I going to do with a 200 to 300 pip box? I can't use that as it's on its own as a confluence. It's a good place as an indication, but it's an approximation and it's a guesstimate, and it's just, you know, it's no good for me. Whereas I have a fib right there at 63. It's a 50% of the last massive swing. and it's on point. And an example of that is the last swing low down to it, where it touched it pretty much, give or take a pip. So the low was 64.6. So we're talking about was it 8? 63.4. So 12 pips. That's, you compare 12 pips on this massive move, how accurate that is. So on like thousands and thousands of pips in movement, you're coming within 12 pips of a key area, of the halfway mark. It's halfway, logically. It's the halfway point, midpoint. 12 pips, give or take. Now, you know, it may vary from chart to chart, broker to broker, depending on the spread, blah, blah, blah. 12 pips. Now compare that to an order block of, say, 200 pips. Again, that's, you might say, oh, well, my order block is like, it's on a 5-minute chart, so it's only a 20 pip order block. I was like, okay, cool. But, you know, that's too subjective, because you could use it on a 5-minute chart, or a 30-minute chart, or an hour chart, or 4-hour chart, or a daily. And then you're sort of saying, well, you know what I mean? It's open to too many variables, too much. You're opening yourself up to too much. It's too much work for me. So I will use an order block. I will use trend lines. I will use EMAs. I will use pivot points. I will use all those forms of support and resistance. I will use my MACD, my stochastics, my overbought, oversold, even my awesome oscillator for divergence. I use all of that, but it's all secondary. And first and primary are the fibs. So I've tested all of these different forms of support and resistance. They're all support and resistance. And some people will say that, you know, what support and resistance do you use? And it's like, well, these are support and resistance. And oh, I just trade price action. Well, I am trading price action, but price action doesn't just go up and down on its own without any sort of, you know, without acknowledging or respecting previous highs, lows, different forms of support and resistance. And so when it came down to it, after back testing, the most accurate and viable form of support and resistance that I could apply when looking at a chart and applying some technical analysis and saying, okay, price is going to go to this level, and the one that always works were the fibs, these Fibonacci levels. They just work. Don't ask me why or how, or just they work. It just does. I'm not here to question why. I'm just thankful that I found something that I know works. Been using them for years, and I've seen stuff happen with them for years, always happening the same levels, time and time again. So we're able to give you something that's been back tested and used for many years, and it has never changed. It doesn't seem to matter what season we're in, what phase we're in, you know, what time of the year it is, what day or night it is. They work. So what are your questions here? Why do you have multiple lines on your divergence? Multiple lines. What do you mean multiple lines? I got a question. I trade imbalances and order blocks, but more often all imbalances get filled, so want to know which imbalances to use. Oh, well, you just sort of answered that question for yourself. But more often not all imbalances get filled. Oh, okay. So again, just to point out, with any form of support and resistance, whatever analysis you're doing, make sure you are using these higher time frames. So top-down analysis is monthly, weekly, daily, 4 hour, 1 hour. Don't start looking at 15-minute, 30-minute, 5-minute, you know, and then trying to do your analysis off there. They're just to help you. The only reason you draw down to the smaller time frames is just to help you see if suddenly a bit of volume comes in and it starts kick-starting the move for you, and you think, okay, I can get in here now, and it just helps you see the move. Whereas if you're trying to do that off a 1 hour chart, it's not really going to show you, is it? So that's when they say drill down to smaller time frames to try and get the entry. And so start trading off these high time frames. People keep sharing these 15-minute charts with me. I just straight away, I just don't even want to look at it. You do an analysis of a 15-minute chart. If it works, it works. If it doesn't, it doesn't. You'll say, why doesn't it work? And I'm just, I can't even be bothered. But imbalances. So yeah, I think imbalances is a good one. You've had this move up here on gold on a daily. We had this rally. Same with Bitcoin. We've had the rally on Bitcoin up to 50,000. As it's stretching and stretching, it's going to pull back at some point. So which imbalance are you going to, what are you going to use? Don't use small time frames. Gold is just going. It's just making another move down, and it's going to go and hit that level. Again, it
So Alex,
sucks that we've
if I
missed
might
this.
on gold in your chart that's up now,
Yeah.
it's had, it's obviously had the rally up. It's retraced to 50%. If that gets down to your 764, despite having, a number of different efforts of recovery back up again.
Oh, what 1600? You mean down here?
764.
What down here? 1600s.
Yeah.
It's a good target, isn't it? It's a nice big round
Yeah,
number.
that's right. Yeah. Yeah, sure. So if it starts rejecting from there, will you try and take that back up again?
Oh yeah, most definitely worth a go if it gets down there on the high time frames. It's powerful. I mean, we've literally, as I've just literally come in and started looking, it's gold is just making this fantastic move, and unable to really get on it, to be fair. Um, sure. See what it does at the retest. It's completing an N shape right now. So we're going to get down to retest at 50% at around 61,764. That's what we're looking for, which is about 100 pips away. It's very, very, very interesting couple of days we're having. Okay, so if it can go up here, what's it done so far? It's already made, how many pips has it gone? From 90, so if we say about 90, it's already done 100 and something, done 150 pips in a heartbeat. It's really nice price action, and we're having a nice big sharp point down sell off on stock markets as well. I really wanted to talk to you about other stuff as well today. Can we take a look at pound yen daily chart? Price almost at 148, strong resistance. It's nowhere near 148. It's at 149. It's at 147.30, and it dropped down to 147. Yeah, I mean it's bullish. You just keep buying the dips. Keep buying. Toff, you need to send me a private message. You've got my Telegram. Send me a message. If you struggle with something and you see something moving, then take action. Sit there stressing and swearing at the charts and swearing at your screen. Send me a message. Say, I've seen something moving. What do you reckon? I want to get on it. This is my idea of a plan, etc., etc., etc. I want to apply this MT strategy to gold if it gives me a pullback, but it's not giving me anything. It's just going, isn't it? Absolutely annoyed with that now. It's going down. See, I get pissed off. It's done the move, and I haven't capitalised on that. I mean, I took it yesterday and got it. And look at this move as well. Total rejection, and we had a signal, a nice retracement back up. Massive wick on the 4 hour, which you see as well. Massive wick rejection. So what I had here was the classic 764 move, and we were shorting, and we've made money on it. Can we make more? Yeah. Is that greed? Yes. I'm going to keep an eye on it. It's very volatile. It needs a little pullback. Let's see what it does. And if we can get a decent pullback, we'll plot some fibs on it. And what we'll do is with gold, we'll drill down. So now this is where we can drill down to something like a 15-minute chart, for example. No, actually, what we'll do is we'll drill down to a 5-minute chart. And this is where we can really, what we're doing is we want to zoom into this move that we're just seeing right now with it's about 26 minutes left to the close of this hour. So this is the move. So then what we do is we can get our fibs. This is where we drill down, and it becomes relevant because we want to scrutinise this move, don't we? We want to see now if we can find an entry with the MT strategy. So we need to say, okay, there's the low. There's a bounce that we're seeing right now. If we could get up to 82 on some cranky reversal, because we know gold is capable of that, then I'd take a short on it. So let's get my account up. Bear with me. Account MT strategy. I've got these 3 accounts now. I've separated 3 accounts. I've got to remember which one's which. I've had to take screenshots and then label it. Okay, 663. Okay, so 663. Which account's the 663? What account are we in at the moment? No, that's not that one. 663. There we go. It's gold. Come on, gold. Right, 79, 80. I might just take one here quickly on this bounce up. Come on, 82. Squeeze up. Let me see it punch above. Come on, get up there. I want to take one here at 79. Just a small position, and I'm going to put my stop. Let's work out the stop loss here. See, this is it's very quick sometimes. You've got to be. And the stop loss needs to be above 90, 80, 82. So we're saying 80 to 90, about 100 pips. Again, that's how we trade. That's how we trade gold at the moment as well. You can't trade gold with a 20 pip stop. People try and trade gold the same way they try and trade Aussie dollar. It's just a joke. You know, you can't do that. 90. What did I say? Oh, we can actually move our stop to break even now, and we can even just take some off as well. Let's take some off on this move down. That was nice, little sniper entry on the pullback. And that's how we use a smaller time frame.
Love it, thank you.
Okay, so that was a quick one. What did we get off that? Just take some profits quickly. It's about 20 pip scalp. Now we can move our stop to break even. Of course, I was using 1780 as a round number. I thought if it punches up higher here, ideally we want to take a short off 82. It may still go up there, but at the moment it's still quite bearish, and we have established that we want to get down into this zone, and ultimately we're looking for 1764. So as part of our trade plan, we're saying, okay, we can see on the high time frame where it can potentially go to. Daily was bearish yesterday. We seem to be seeing a continuation today, very strong. We are going to come down to support. We do have some divergence setting up on the daily, and we have got it on a 4 hour. You've got to appreciate though that this is a 4 hour and a daily. You need to allow for these candles to close and these times to close, so we have got time. So that's why, again, take some profit, because it does this. It will mess about. Now, good thing is, just been stopped out. I've just been stopped out, but I just took a quick scalp. Now, if it can get up to here, so that's one. So we've taken some profit. So I feel better now because I've taken something off it. Ideally, it will give us another setup. So what we want to see is price get up to one of these retracements with an MT strategy. So the MT strategy will say to us, okay, look, we're in a downtrend. Let's allow it to go up, and then if it can go up as a retracement, then we'll what do we call it? We call it the 3 option rule in terms of price action. So the 3 options are quite simple. It's going to retrace to either the 38.2, the 50, or the 618, or ultimately the 76.4. So I've got it on a 5-minute chart because you can see the range in a bit more like high definition. You can clearly see what's happening. And then we're just going to see. Where do I train this? Right. No idea. People send me messages that don't make any sense. Yeah, sorry about that. So first option will be it's going to retrace to one of these key fibs. The second option, it will make a full retracement 100% and do like in this case, a V pivot. Those nasty V pivots. But then that's telling you something. That's telling you that it's a reversal. So we could be going long once we've done this whole move down. And then the third option would be that we would make an extension. So one of the fib extensions. So just purely based on this range, unless that low is taken out, what we would do is we're looking at it and we look at the fib extensions, and we would say, okay, price is going to reverse, and then it goes up, because what will happen is it might go up and take everybody out who's trying to go short. So if you haven't made your money on this initial move, then the FOMO takes over, fear of missing out. You get really start getting sweaty, and you think, sod it, I'm jumping in. You jump in, and you didn't allow for any sort of pullback. You just jumped in, and then it pulls back on you, and that's just impatience. And sometimes you've just got to sit on your hands and accept the fact that you've missed it. And so what I tried to do is devise some sort of strategy that would allow me to capitalize or find entries on trending movements whereby we are looking for a pullback. If it gives us a pullback, it's a bit like the simple concept of break and retest. You know, where you have a break of the high or the low, it'll break out, and then you wait and you say, okay, one of my rules is to wait for it to come back and retest what it broke out from, and thereby giving you that confirmation to say, okay, we've broken, we've just retested, and now we're going. And it's telling you, okay, it's going to go, and it's going to make the move. It's broken out, and it has broken out and made the move. Because a lot of the time, it will just be a fake breakout, and it will break out, suck you in, and then it goes the other way. A simple concept with this. So we've taken that idea of price action, because it is price action, and we can apply it. The best thing we can apply, in this case, is as applied to things like gold and things like the stock markets, the Dow Jones, because they tend to make new highs and new lows. Whereas Forex pairs, unless they're on a trend, like the pound pairs are doing really well at the moment, and they've been making higher highs and high lows, and they've been trending really well. So when it pulls back, you buy the dip, and it's been quite nice for that. But most of the time, you'll find that Forex pairs they fake out. They don't make a new high, or if they make a new high, it's just a suck in some stop losses or liquidity grabbing, bit of a stop hunt. And if you're naive, you end up buying at the top, and then it drops back below, back into the mix, and stops you out. And so Forex is known for that. So you have to know when is it breaking out, and understand why is it breaking out, and fundamentals suddenly can help you with that as well. So pound pairs have been on a lovely bull run. I think pound dollar needs to lead the way. It needs to get up to 140. It's stalled at 139.50. Likes the 50 number, and now we're having a bit of a bearish sell off. Euro pairs just tanked as well, and so allow it to go down. Allow all the pairs to do what they need to do to the downside. And we'll start monitoring the downside movements on all of these pairs, because they've breathed in and now they're breathing out. So they're correcting. So allow them to do the correction, and when they find some support and start turning, and people start asking me, is it bullish? And I'll say, well, it's bullish when it's bullish. So don't try and be heroic and call the top or the bottom and try and jump in, and then it just keeps going against you. Just have to wait. And when it starts, because I know what you're trying to do. You don't want to miss out on the move, so you're trying to get in at the very start. And then you can massage your ego, because you can say, oh yeah, I've got a sniper entry on this. I had no drawdown. It was fantastic. And it was like, yeah, but unless you've been trading for 5, 10, 15, 20 years and you've got it in your trade plan, and it's something that you do and it's how you trade, that's a skill. It's something that you have to take time to get good at and master. Otherwise, just allow it and look for the confluences. Allow it to do its move, finish its move. So it's like now, if I asked you a sensible question, would you go long on gold? And there are traders that would. They'll be trying to buy this dip. They will buy this dip. And sure, it may well go up here, but it's a counter trend trade. But there are traders that will, because they're trading off a 15-minute chart or a 5-minute chart. They're not really looking at the bigger picture. Or they say, okay, it's come down into my order block, and it's testing the previous structure. And so that for them is enough of a confluence. And it may well be. And if it works for them, great. But for me, the safe play is to just allow it to do what it needs to do. For me, I'm not happy. I would be interested. I was speaking to one of my pals yesterday who trades. If it was to get down to like 1600, then we would be interested in taking longs and holding for a positional trade where you just hold it all the way back up. And we said last year, we were saying tops and bottoms. We were saying, okay, who's buying the dinner? If it goes down 1600, I said, we're looking for 1650, 1600s. And he goes, if it gets down there, I'll buy you dinner. If it gets up to, I can't remember what levels he was saying, then you buy me dinner. I think, to be fair, it went up to his levels first. But he said, if it gets to 1600, I'll buy you dinner. It's like, just because hopefully we'll be able to get out by then. Won't be in a lockdown. Okay, so I've got gold on another screen. I'll keep it up here. I've got my fibs on here. We don't need to do anything. I want to get on the euro dollar. Yeah, go on. Did you guys want to ask me something?
I just wanted to say something like what helped me really is stopping like going on those trades long is when I think it was you that actually said it, like just never try to catch a falling knife. It's something like every time I'm thinking about going along on that, I just like imagine trying to catch a falling knife.
Yeah, yeah, yeah. It's true. It's true because you end up the battle scars where you're starting out. You'll go with the move and you'll be like, yeah, don't think twice, and then you start to overthink it because you start seeing price bounce, and so you're thinking straight away is right. Where's the bottom of this move? I'm going to try and get in at the bottom, and it's like so you start overcomplicating it without realizing because your experience, shall we say, is leading you to understand that okay, price may well find a bottom and reverse, but in a strong down move, you have to kind of or strong up move, allow it. Just be patient. If you are going to look for a play to the upside, you have to look at the daily. And like on gold daily, the daily candle now is giving us, just like yesterday, it's giving us a nice bearish move. So it's bearish, and I couldn't possibly think about going long. And I can see that it's within striking zone of the previous low. It's completely N shape, 50%. There's a few confluences there. So, can I hold it for down to there where we are starting to see some exhaustion to the downside? We are starting to see some divergence on the high time frames. So I'd rather just do what I just did there, wait for little pullbacks, scalp it, see if we can get 20, 30, 40, 50 pips, whatever it gives us, and see if we can squeeze a little bit more out of it. And if so, great. But otherwise, don't get too caught up on it. Because the money was being made yesterday. The 5% days, 10% days, the days where you can make your money, they happen maybe once a week. Is what I keep saying, isn't it? To put things into context, you have 5 days in a month, 5 days in a week, and you have 20% of the time things are actually trending and moving, and that was yesterday. And you know why? Because people have been on holiday in places like America. They had this 3 day off, 3 day weekend, long weekend. It's Chinese New Year as well. You've got all these gambling addicts all sitting at home and locked down. Like, right, let's do some trading. I've missed it. I haven't done any for a few days. And I thought it might be quite busy yesterday, and it was, wasn't it? It was super busy yesterday. Everything was moving really well. There was some good movement, and that might be something to do with, in part, that everybody was around trading. So yeah, it's quite interesting. But note that was the move yesterday. It was all moving yesterday. So if I saw people making 4 or 5%. Somebody made 6%, and they were -2% for the month, and now they're +4%. So they're like, okay, that's equivalent to me making a 1% a day or something. This is annoying me. What's going on with this? Why is it doing that? So to put it into, you got to keep things, put things in perspective. Keep things in perspective, in the sense that you just had a bumper day, which if you made 1% a day and you made sort of 4 or 5% in a week, you'd be really happy with that week, wouldn't you? You surely would be. And if you're trading with a $100 account, maybe not. It doesn't mean anything. But if you're trying to think about the long game and you're trying to say, okay, I'd like to have an FTMO account. I'd like to be a prop firm trader, a funded trader. So I'd like to have $100,000 to manage. So making 1% a day on that is credible. It's $1,000 a day. It's realistic. And so then when you start thinking about it in a whole, bigger picture, sensibly, and trying to think of this as a career, then that's where you have to take it, really. That's where you have to be. Oh, I should have said, actually, the Zoom's gone. That's cool. Zoom's neither here nor there. Let's just connect this up, and then I'm going to go through the euro, and I'm going to go through the Dow, and I'm going to go through gold as well. I'm going to quickly run through everything that's happening, everything that has happened, and let's get that going on. It's very important. Where are we with this? Right. Get that on there. Good. Right, move that over to there. Sorry about that. Let's have a look at euro dollar. Yeah, euro dollar is doing a nice move. We've got the stock markets are doing a nice move. We've got stock markets tumbling down, looking for 30 Dow Jones, maybe looking for 31,450 again. That's some strong price action. Everything is quite bearish, isn't it? I have to say, quite bearish. Can we short on GU now? What do you think? Not sure. Let's have a look. 38.50. Still 100 pip retrace. Yeah, possibly. Depends your stop entry. You maybe want to take it down to the 764 around 138.20 area. And then at that point it needs to decide whether it's going to turn bearish or bullish. But certainly it's all there's a lot of profit taking going on, because you can appreciate just how many traders have been trying to take this up to $1.40 on pound. And so getting it so near to $1.40 is always something that can happen, right? And they'll drag it up there. They'll entice people to keep buying, and then you get sucked in at the top. And there's a lot of profit taken up there, and a lot of liquidity, and then they'll just drop it on them. It makes sense, doesn't it? It's understandable. So yeah, can you take it down? You can. But for me, it's a counter move. I could have taken it yesterday with Divergence. I did show the Divergence, didn't I? Why is my Divergence not on here actually? Let me just show you this with the pound. So Divergence on a pound. I really want to show you the other trades as well. So we take the last swing high and the last swing low. Oh yeah, I'm looking at the wrong thing. Here we go. This is what we're going to do. There we go. Now I said to you on Monday about pound dollar. I said for anyone who's is it gone? For anyone who was looking on the holidays. Oh, come on, stop messing about. Yeah, during Monday's session. What is going on here? Seriously, there we go. Better. Right, so the last high. Again, we're getting some very early moves early on. See what else we can get here then. 764 strategy. Which one's my 764? Bear with me, I just need to check something, because there's some moves happening right now on fantastic movement. I've missed it. There you go. Can't keep up today. So much happening. 664, and I don't even know which account to use. It's hassle. I've got about 5 accounts here, and I'm trying to separate each strategy so that we we have data. It's just not even worth it. Look at that. That was the move. There, that was the move. So I've got something on this move at the moment from yesterday, and we're still waiting for it to finish. But there was it was a continuation just now. We're looking for 300. We have some support at 436, which is this, roughly, give or take. Let me just double check this. Where's the low? 348. Okay, 1348. Yeah, give or take. So I've just taken that last low. It's very subjective in terms of where to put it on there, because this is a 1 hour chart, and we've got a few possible a few possible lows that we could use. Logically, I used the lowest. That was the lowest point at 31,356 before it bounced and went long. So yeah, it was just we had some nice movement just then. I could have actually scalped that from 500. 500 proved to be a pretty decent area. It's raining pips. It's just get your bag. What do people say? Pip bag. Start filling it up. Crazy. It's good. It's good. It's a never-ending buffet. If you can't make money, just clearly you need to stop and reevaluate everything that you're doing. Back to the drawing board. Start with how much risk you're taking. It could be that you're risking too much on a trade that's causing you to make rash decisions, jumping in and out. You're not able to stick to your trade plan because you're risking too much. You feel very uncomfortable. That makes sense, doesn't it? Okay, let's get back to let's get back to the euro dollar. Euro dollar at the moment is having a bit of an MT move at the moment. It's quite nice. Let's pull the euro dollar up on my charts as well. And yeah, we're just testing that area, aren't we? Going back up now with gold. That's good. So we're back up to 82. So aggressive reversal. I'd like to see it punch itself up higher. I'd like to get it up to about 83, 84, 85. Will it get up there? Don't know. If it fails at any of these levels, this is the 3-option rule on gold. If it fails at one of these fib levels, starts to curl over back down, then there might be a, allow it to do it. There might be a play for, yeah, I can see that. There might be a play for a bigger move to the downside, down to that 60, what did I say, the previous low around 64. We will see. Right, let's have a look at euro. So euro as well. And the Dow's done a perfect move, exactly to my target, and bounced off that. Yeah, good. I can't keep track. So we had with the euro, we had divergence. So on the daily, we had divergence, so exhaustion. So people trying to call tops and bottoms. That's the beauty of the divergence strategy. It helps you understand when is it likely to actually reverse. So we had what we call 3-wave divergence. So the volume was getting lower. So it was showing signs here. There's the volume, initial volume, and then it's getting lower and lower. So 1-wave, 2-wave, 3-wave divergence, getting lower and lower and lower. All the while prices being forced up and up and up and up and up. But it's broken out of the last range, the last high, and it's been forced up. So all of this was just being pumped up, perhaps to stop anyone out or to suck in some volume, some buy-in to the upside. Of course, it's very bullish, but the volume was going down. So that's divergence because it's diagonally opposite. I keep saying to people, divergence is one of these based. It's all about volume. So the volume indicator. Sometimes you see the profiling along the side of your chart. Some traders will have it here, vertically positioned down here, or on the left side here, somewhere, or in the middle of their chart, somewhere here, to show this sort of volume. So you can see I have it here to show divergence because then it mirrors it quite nicely. So we're going up, but here we're going down. So you knew it was going to exhaust. So knowing when it's going to exhaust, is this where these key fib levels come into play. They're really powerful. So you saw the first move down, we hit it already. So we've already tested 120 round number. 120.11 was the previous low, which we took out. We dipped down below and then we bounced up, but we've struggled to go up. We've struggled to maintain any sort of momentum to the upside. So we need to allow it to finish off its move to the downside, which it's trying to do at the moment, isn't it? It's trying to do that. So for me, euro dollar is a bit of a funny one, but somebody was trying to buy it off the 764 yesterday. Let's explore that. He was using the 1 hour chart, and it just wasn't right. It just wasn't right for several reasons. If you look at the 1 hour, again, you always have to look at the bigger picture, the wider picture. The bigger picture suggesting that it's bearish, and we've had this pump up and totally rejected. It broke out, but then it was a fake out. Basically, look, you can see it on a 1 hour. It's a fake out move, isn't it? Oh, where are we going? Fake out move. Suck in some buys. Was it going to go up? No, it reversed. So when we had this sharp sell-off, what he did was instantly he said, "Oh, okay, I'm gonna put my fibs here, and I'm gonna look for the 764 to buy it back up." Okay, fine. And he's using this little low, which is okay, yeah, it's cool, but that's not the low that you should be looking at, because all he's doing is he's viewing this under a microscope. You're too close to the action. It's fine. So he's looking to buy here, which it did bounce off here. It did give some form of reaction, which is okay. But obviously my low is here. I'm thinking this one is the low. That's just a blip. I wouldn't put all my eggs in one basket. Just based on that. Okay, what's happening with gold? It's a bit messy, you know, but it's consolidating, and I'm not happy with that. So yeah, you know, he tried to buy here. So that's fine. 764, buy it here. You've got a 200 EMA on the 1 hour as well to provide some confluence. To go back above, that's great. So what do? You buy it, great. But then the idea of a 764 is to give you pinpoint precise accuracy in terms of your entry and exit point. It's the line where you use that line and you say, okay, if it breaks below 764, you don't try and take it long. If it holds here, you take it long. It held, he took it long. Immediately, once it goes up here, you see it rejecting and coming back down, move your stop to the 764. Now, if you're in just below that or just above it, you know, use the area as your line that you draw the line in the sand and you say, okay, if it wants to come back down like this, all bets are off to the upside. I'm not going to hold it. And what happens? You might get stopped out for a tiny couple of pips loss or a break even or a very slight profit. You know what I mean? Just think, okay, this is not doing what I want it to do, because ultimately you want to see it pull back, just a pullback for it to keep going, but it didn't. It was the 764 so relevant. The reason it's so relevant is, for me, this tells me that we have the initial pullback and that's viewed as a pullback. And applying the 3 option rule, this is option 1. Now, if it breaks 764, we have a trend change. So for me, the 76.4 is significant. That 76.4 fib is the significant line in the sand for me to tell me when something changes sentiment from being bullish to bearish and vice versa. So that's why. So to give you an explanation as to why it's so powerful and why it's so relevant, there's more to it than just a fib level. For me, it's the key fib. It's the key area. Its significance tells me, and then obviously we add other confluences. There's 3 confluences here. You have the 76.4, you have the 200 EMA, and you have a round number at $1.21. So $1.21, so 121.02. Okay, so $1.21 is a round number there. We have a 200 EMA. This is a 1 hour time frame, which is fine. You want to use 1 hour and above. And we basically are saying, okay, if it holds here, we have these confluences to help us to go long. And sure, it was a bit of a reaction. So you could have taken a scalp off there for like 20 plus pips. What did it go up to in the end? It went up to about 23. So depending where your entry is, you could have taken a 20 pip move, banked some profit, moved stop loss to break even. Fine, 764 strategy. For someone who managed that trade correctly, they would have put that down as a win, and they would have recorded the 764 strategy as another successful hit rate, as another successful win. It just depends how they manage that trade. For this other person, he put his position on. He wasn't too bothered because he managed his risk correctly. How much did he risk on that trade? 0.5%. So he lost 0.5%. Me, I wouldn't have lost anything on it really. A couple of pips maybe at best, depending on my entry, because I would have been stopped out around break even. I might have even taken some profit on it. So, most likely taken some profit on the first pump. Again, this is when you draw down to the smaller time frames to evaluate the price action. So right now, this is why it's significant. It's broken all of this support. 3 confluences for me. EMA's all telling me it's bearish. Broken below the 200 EMA on the 1 hour. Broken below the 76.4. Broken below that 121 round number. Bearish, 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 bearish. Change in sentiment. There's a strong push down, and that is actually the start of the move to the downside. Let's put some fibs on this as well and just manage that retracement. We could say we could use an MT strategy as well, because we're looking for the first option rule on the retrace. So we put our fibs on there, look for a retracement to like 38 or 50. In this case, you can see it's probably the 38 at 121.23 and a half. What's the high? the high got up to 123.9, so it was actually zero point 0.4 above that. Rejected, dropped down. MT strategy. You know, we've had the confluences broken, tested, retested, break. Let's go. You know, let's go. Where's first target? Well, first target's got to be back down to the previous low. That goes without saying. So 76.4 down to the previous low. That's nice. That'll give you about 20 to 40 pips depending on your entry. Your stop loss can be tucked in nicely above there. And then second target can be, I don't know, I would have said somewhere around here, 120.60 or 120.30, because I'm using these fibs. But then I need to look at the high time frame, and then I need to look at this range as well. So let's look at this range, and I'll put it on my other chart so you can see it a bit clearer. It's just price action. It's so easy when you know how. I guess it's just trading is just, it's child's play. There's nothing to it. It's just so simple. It's just price action. Let's have a look at it. Let's explore. So let's strip these back because I've got them on my other one. Let's strip it back. So we're just the extensions on there. Sorry, what are your questions? Any questions about Euro? Any live trades today? Yeah, we took the live trade already. We just shorted gold. In and out, job done. Money made. Just keep adding to the pot. So let's put some fibs on here. I want to look at this. Look at this reversal candle on the daily. We know we're bearish with that. Nice reversal. Let's put some fibs on it. Let's look at what it's doing right now. Somebody asked me this morning, and I said back down to 120 area because that's a 764. But anywhere down here for a move is pretty decent. Pretty decent. So it's 121.69.5. Okay. 121.69.5. Okay, so we're there. So yeah, it's done a 618 retrace so far. Fibs are magic. They're just magic. They work. There's no drama. You just use them as your roadmap. You go from point to point, level to level to level to level, buying and selling off these levels. And so you know where you put your stop losses behind these levels and say, okay, if I get it wrong, what's the worst that can happen? You never allow these trades to just run and run and run against you. So we shorted the move on gold as it pulled back. It pulled back to 80, and I just took that first initial pump down. It did go down to about 74 in the end, which is it's trickling back down there now, isn't it? So I took that first initial spike down, took some off, moved my stop to break even. Yeah, and then it just spiked up. And I wanted it to actually go a bit higher, but it's not. And it looks like we've got further downside potentially. It's quite bearish, isn't it? And we're looking for previous low 60 area. But yeah, hopefully that makes sense. Watch this video again, watch it back, and get some idea of what's going on with price action and how we use the support and resistance to guide the price. And oil 4 hour looking good according to Divergence. It probably is, you know. I'm not going to look at oil at the moment because it's quite a volatile pair. It's been going up and up and up. Shall we have a quick look? Let's have a quick look. Just got my eye on gold at the moment because that's moving quite nicely. They're correlated as well, aren't they? So with gold going up, we should see a bit of a downbeat move on gold as well, which is quite nice. Okay, let's see what happens here with the gold, and let's switch to Bitcoin's broken 50, and that's just going for the stars. Okay, so 52, we're looking at about 52, and see then if we have divergence because the volume here is thinner. It's starting to thin out a bit. Divergence, let's have a look here, there to there. See if what's this, a daily as well, so let's see how it handles it. Yeah, so Jay, I was saying, you know, with regards to gold gave up a lot yesterday, and we done well out of it, and it moved, and it was all nice. So today I don't really want to be aggressive like I was yesterday, and just expect it just to keep giving and giving and giving. So I'll take whatever it wants to give us today, and I took a bit off it. That's enough, you know. If it breaks, then I'll hold a little something. You know what? I might put a little something on this. We have done a retracement, so I'm going to take something short here. Small position at 76. Why is it not doing it? Come on. Oh, come on. It's not even letting me get on this now. And my stop loss is going to be 80. Let's have a look. 82, isn't it? 82 roughly. It's consolidating. We've got 5 minutes. 5 minutes in. Is it going to break or not? 77 going up. You know what? Yeah, no need for greed. That's right. No need for greed. It's not. It's faffing about. I haven't entered. I've not taken. You'd hear it if I did. I haven't done it yet. I was just waiting to see if it was going to break on down, but it's been quite busy today this morning, and it's just tailed off and gone a bit dead. That's done its move. Euro yen. Somebody asked me about euro yen, and then we'll have a look at oil as well. So euro yen has been bullish, and then we've had the correction in line with the euro pairs. So we've had euro dollar, euro yen bearish, pound dollar, pound yen bearish, back into the range. Some good little scalp moves, you know, good little 20-30 pip moves at the minute. Let's have a look. Oh, you're Blue Seal. Hello, Blue Seal. Why Blue Seal? What's that then? Yeah, I'm here. I'm on it. Yeah. So yeah, we broke out and then we're dropping back in the mix. Let's have a look at euro yen, back into the mix. Let's allow gold to do what it needs to do. It might just pump up. If it can break sort of 75, 74, 75 to the downside, if it can break that area, then we can ride it down, and we can take it down to 65 or so. We've taken a little something off it, and then it has started going sideways, so we'll just hang on. And whilst we're doing that, let's do the analysis on this. Let's do fib extensions. Look for the fib extensions. Let's drag this across. We have divergence. Remove these ones because they're not relevant. Note which fibs I've got. Just got the extended fibs. It's not clean cut, but we are going back to 127.50. Put some, this is a daily, so that's quite nice. Put that on there. Like that. Oh, okay, if it wants to do it. Let's have a look at... Even if you don't do anything today, you don't feel inclined to just go and get some scraps, but take note, you know, monitor what's going on with the price action. I think back down on the euro to retest that 120 area. It's pretty decent, and that's already made its move off 128.14 area, and is going down quite beautifully down to 127.50. So that's giving you about 60 pips to the downside. So you know it's already done what we wanted it to do with divergence. It's a never-ending buffet. So we say look for one, you know, trade 1 to 2 to 3 pairs, and that's it. Because you know, like here, I'm going from here then everywhere, and I just see opportunity everywhere, and it can actually become quite overwhelming, and that's counterproductive, isn't it? You end up doing nothing. You don't know where to go first, and it can be quite funny, but at the same time quite frustrating. You're like, oh. and so that's why it's important to when we say focus, that's literally what we mean. Focus. Pick a couple of things that you like to trade, stick with them and focus. What I used to do years ago is I used to just have pound dollar, pound yen, euro dollar, euro yen, and maybe gold and indices and a few things. But then I used to look for a pound move or euro move, a yen move, and then take one or two of the pairs together, and so put some risk on. So if I was shorting euro dollar right now, I'd be shorting euro dollar, pound dollar. if it was a dollar move, or a euro dollar, euro yen, or pound yen, euro yen. So right now we are seeing pound dollar, pound yen move together. We've got euro dollar, euro yen move together. So actually all four pairs have just been giving you some pips to the downside. Bit of a bearish correction. Again, so divergence allowing you to take it back to the 100% previous structure first. Where it broke out from. Again, what we talked about just a bit earlier on, regarding a break and a retest. So it's broken out now, and now with divergence, it's dropping back. So see what it does when it gets down here. Could this be a start of a trend change for a deeper correction? If it is, then what you would do is you would just simply, so you've got this on, you identify that you have, like I'm just showing you, have divergence. All right, so we've established divergence. So we don't need to have that on there. All we can do here is 125.08. Let's just keep it something like that for reference. Something like that roughly. And then what we can do is put our fibs to monitor this actual range that we're in, because we're starting to see a move down. We need to pick the high and the low, and we need to pull that across, and we'll put them on, put our fibs on. We're going to apply that 3 option rule. And we are going to put our fibs on, and we're going to monitor this pullback. So in line with, which, oh, it didn't pull across, let's pull it across. Quickly get that on there. There you go. So and then actually, you know what, we don't even want this on here like this. I want to just pull it back because it's actually in the way. So like that. So we've already established divergence. We don't need to have that over here now. Let's focus on this actual drop back. So first target is 127.50. Short on euro yen, 127.50 area. Previous structure. Put your fancy order blocks on there as well if you want, just to give you some idea of potential where it can get to. So you want to start adding confluences. You start building your confluences into the mix. Previous structure was here. All this consolidation. We had consolidation, a dip, and a rally. So the pullback, liquidity grab, then off it went to the upside. Now it's done the extended move, made a new high. We are seeing divergence with our awesome oscillator. That's why we use it. Forget RSI. You can use RSI as well. RSI seems to work quite well. Some traders I've noted use an RSI as well as this, both together. So they said, well, it gives me double confluence if they're both working in, side by side. I was like, yeah, cool, do it. So yeah, I shouldn't say forget it. So just don't always just rely on something else. If I'm using one thing and you want to follow the strategy, then that has nothing to do with me being a control freak. I am a control freak, but it's about, okay, I've got a strategy. These are the guidelines. These are the rules to that strategy. If you start taking it and start changing it without even properly backtesting it and running with it, and you haven't got the knowledge or experience to be a to say that you're a good trader, then would you really rely on your own on your own experiences to actually be qualified enough, as it were, to actually make changes? That's what we're saying. But yeah, if you want to add things to it as added confluence, go right ahead. It's brilliant. The more confluences, the better sometimes. And again, if you want to share some charts with me, that's the whole point with Telegram. Beautiful, just with Telegram. At ALX_TYW. Just send me some of your charts to say, look, this is what I'm doing. Guys, stop sending me stuff like a blank chart and then saying, what do you think? I'm not going to do it for you. What do you think? What are you thinking? You've obviously got this chart up for a reason. Tell me what you think. No, I'm not a good trader. I just have experience. I'm hopefully able to convert some of that experience, monetize some of that experience. Shut up, Jay. Right, so where are we going with this? Okay, so first target, 127.50 euro yen. Again, I don't trade euro yen on its own. I will trade this if it is a euro move or pound move, and yen move, and it seems to be moving with those pairs. So let's put this on here quickly. I just want to put my last bit of confluence on here. Get that over there like that. It's way too big. It's just a big ugly square box. I just, you know what, I don't even want it on there. Forget it. It annoys me having stuff like that on there. It's just, I put it in a box and I say, yeah, about there. It's like trying to pin the tail on a donkey blindfolded. It's just, yeah, about there will do. It's like, it's not accurate enough. As an added confluence, fine. Let me show you quickly. I wanted to show you the momentum strategy that I used for the Dow Jones yesterday. Now, I almost missed it, but thanks thanks to my pal for saying, "Oh yeah, have you seen the weekend gap on the indices on the Dow Jones?" I was like, "Okay, no, I didn't," and I almost missed it. So it was like, there's the gap, and where was it? It gapped up down around 31,500, and we went all the way up about 200, just over 200 points, which I thought was fantastic because, you know, every time it goes up, it's making record highs. So we're making record highs on the Dow Jones, on the US stock market. So yesterday they came in, and yesterday morning we noted that we'd had a bit more of an up move, which we noted as well that each holiday we're seeing upward momentum. Come on, gold. Gold's just faffing. What are we waiting for with gold? Sideways. And so we noticed that on the holidays we always have an upbeat move, but then it's short-lived on the Tuesday, the following day. That it seems like bullish. Everything's bullish on the bank holiday. Nothing changes. No one's around, so they just let things continue to go long. But then come Tuesday, pretty much from the Asian session, everything started to change, and we started seeing that bearish momentum across the board, really. You know, exhaustion in these pound moves and euro moves, gold, stock market, really good. So so we started looking for shorts. So let's have a look at that. So we said, all right, now's the time. It's going to go and fill that gap. So we're still holding a little something on this, really good. I'm actually going to move my stop loss now. That's what I need to do first off. Okay, and I've got one eye on gold as well. Let me just adjust that. So where we bring it down to, we're going to bring it down to here, which is about 570. 570. 570. And 570. Okay, good. All right, good. So we just, see all this noise, and it's had a go. It's rejected, and we're just watching it. It's quite nice. We had this. So we had a move, and it was really funny yesterday because I put it in the group, in the live Telegram group as a trade call to go short on the Dow to 500, knowing that the gap is below 500. It's slightly below. And it didn't touch. It went to 501. First comedian. It went to 501, and then it literally rallied up. It bounced off there. So I had positions on there, and I was scaling in, and I was taking some profit. But I left a few on. I had 3 positions running to just hit the target, and they didn't. They faffed around here, and they went up, and they bounced. Where is it? This one. Here we go. This here bounced here, and it was just missed it by a whisker. And then what did it do? It went up. It did like a stop hunt, didn't it? It went up and stopped everybody out and retraced 50%. It retraced to the 50%. So with an MT strategy, I was able to get in again and start scaling in again. So I took several trades, like looking around the 600 area for back down. And as it went down the second time, curling over, I started bagging the profit and banking and taking a little bit off. And it was quite nice, really. A simple MT strategy where we've done the drop down, pull back to 50%, and then away we go. Let's just move these, just in case you can't see that. Move this to the center. these fibs. There we go, get them out of the way. And then let's pull these ones as well so you can see exactly what I was looking at. Very simple strategy, because people often get confused with it and feel a little bit like they're not too sure with it as to, you know, what is it they're looking for. And okay, Jeff, are you okay, mate? You're logging in and logging out a few times. Do you think the US 34-hour support will break and continue to drop? Will it? I know you said you don't trade euro pound because of the daily range, but would you say it is showing divergence on the 1 hour? The bigger picture is it hasn't finished its move to the 764. Well, it's directly, euro pound is directly correlated with the pound dollar, so pound dollar still bullish. We've had a pullback now, 138.50. We've done a 100 pip pullback. That's quite nice. We may well see a bit of rallying now in line with the US Open. Who knows? It might start to go up. And if it starts going back up, then expect euro pound to keep going short. So you add it as a confluence, or I add it as a confluence. So if I'm trading pound dollar, I need euro dollar as a reference, as a looking at it to see what it's doing. Because if one is bullish, the other should be bearish. Simple as that. So we'll have a look at it in a sec. I wanted to walk through this and then we can move on, because it was a really good simple example of an MT strategy. So the MT, the awesome oscillator, you know, is bearish. We're down below. We haven't got divergence. We've actually got volume, showing good volume to the downside. This is a 15 minutes, so it doesn't count. Let's have a look at it on a 1 hour. I did drill down to the 5 minute and 15 minute though to look for the pullback, because we bounced up and I measured the pullback, and when it got to the 50 I thought that's cool. And if it stalls, and I was saying to my pal as well, I was like 620 area, and by getting in there you can put 100 pip stop loss at 720 up here, because then that's above the 764. And again, you trade something like this with a large stop loss, swing trade it like with a good 100 pips or so, sometimes just better. It means your lot sizes are smaller. Same with gold, you know, bigger stops, smaller lot sizes. Generally, if you're getting in on a position and it's not really doing much, if something is moving and you're catching that move, great. Once it moves, you can add and scale into your position. So, you know, I added on this drop down, I was constantly adding to 500. And I just thought, you know what, I can let this ride to 300, because that's what we're looking for with divergence. But yeah, what's going on with this? Oh yeah, so euro's dropping, euro pounds, euro dollars dropping. And it's doing exactly what we said it was going to do. It's all good off divergence. Down to 127.50. That's cool. That's working. Oh, there's so much money to be made. Anyone making any money? That's all I want to know. Anyone making any money? Anyone made any money today? Anyone?
I'm not traded today.
Has anyone lost any money?
No, I've been stopped out at break even a couple times.
Okay.
I just stopped on Bitcoin and I think
all right.
gold. Yeah.
That's all right. Good. It's all right. Break even's all right. Don't worry about it. Let's see who else have we got here. Let's mute this. We got Alex. I wonder about test after watching my food. Would you be able to forward me your backtesting Excel spreadsheet? Yeah, of course. Yeah, we can do that. It's on the video actually. It's in the explanation at the bottom, the link. So you can do that. That's cool. And 7. Oh, don't do that. 764. Okay, what's this? What chart is that he's looking at? That's probably the euro dollar, isn't it? It's got to be. Again, he's just doing it off his phone because he can't be bothered to download the app. Can you download?
I think we're getting a slight pullback on Euro USD from the 618 level.
Sorry, say that again.
We're getting a smaller pullback on Euro USD from the 618 level.
Yeah, that makes sense. That makes sense. Let's switch it over. Let's have a look at the Dow Jones very quickly, and then Because someone's asking about that. Oh, again, are we done? These meetings they suck. It just throws everything. Okay. There we go. All good. Hopefully today's session's been beneficial anyway. Hopefully you've gained some bits out of it. So there's not really much to do here now. We're just waiting for the US markets to open, which is now, and I really wanted to see if I could catch something, maybe like a move up or something. So I'm gonna put all my eyes at the moment on all my eyes, all 7 of them, on the Dow. Let's have a look at this Dow. Yeah, we had Divergence, and let's get this out of the way. Let's reduce that. Okay, so yeah, I've got it on here already. So we're looking for 39.35. That's okay, that's nice, that works. And let's have a look at this on a 15 minutes, drill down. So we've got the 200 EMA on the 1 hour. So we might just go down to 31,400 area, maybe tap out. Let's see if we can get something on here though. Let's have a look at the Dow. It's got to be with MT, right? So MT strategy 663. Pain in the arse having to switch from account to account though. And geez, by the time I do that, it just, there you go, and I just end up getting a crap entry, crap fill, and it just doesn't. Absolute joke. Come on then. Really? There we go, done. Gotcha. Nice little scalp at the open on the Dow. Nicking some pips down to 400. That'll do nicely. Absolutely spot on. Yeah, that's good. Okay, good. Alright, good, yeah. Just need to grab some money off that because otherwise it just wouldn't make sense to leave that moving as nicely as it's been moving. Yeah, 7 eyes. Nearly have an account for each one. I know, right? It's mental. Yeah. Just we broke the 76.4 on the Dow, and this is the US Open. So I was just looking for a bit of a downward move continuation, obviously still in line with what I've been sharing. So, you know, hold something, but also scalp it as well, and just keep tightening up that stop loss. Let's get rid of this one. That was the first target. There we go. And we can get rid of these because they've served their purpose. And yeah, happy days. Okay, we need some Indiana Jones music or something, you know. It's just I get fun with this. It's just, yeah. There's a guy I used to listen to years ago. He used to do stuff like that. Well, where are we at now? We're looking for 300 with the Divergence. Come on, baby, keep going. Well, let's have a look at this. 350 area possibly is a good area. Let's see if it can do it, because it has broken. broken through, and you see where it's tested the 76.4 of this range for fourth time. So really good level of support there. And the fact that it went down, tested it, and I missed that initial drop to get in on it when I was talking to you guys. But then it broke on down through, and we had the start of the US session. So I just thought, okay, let's see if we can take it down to at least 400 and see what sort of bounce we get off that 400. And we had, so we made money on the gap fill yesterday. Let's remove that. It's already gone and broken the 76.4, so I'm not going to use this anymore. Okay, so but we will pull it across. Eyes are on the now, so you see that, don't need to have it on there, don't need to have those fibs, just to clean up the chart and to focus on the bigger picture now. Stuff's been tested, broken, 3-4 times. If it goes back up above there, so be it, but for me that's saying, okay, down here and 300, we could probably see it drop a lot lower than that. But the reason we're doing that level is because if we look left on this chart, have I plotted it here on the daily? It just gets a little bit messy there. Let's stick it to a 4 hour so you can actually see. I don't want it to get too choppy. Okay, so where have I done it? Okay, let's plot it on here on the daily because this is nice and clean. Fib extensions, always fib extensions. Divergence, ton of divergence. And we went here, we've done the same move. I should highlight this exact same move on the, what was it, the euro pair as well, just a bit before consolidation. Then we have the pullback, the liquidity grab, and then off it goes and makes an extended move. Yeah, same price action there, down, and then explode. You'll see this setup time and time and time again. So bullish uptrend, obviously goes with that saying, it's bullish. Look for the corrections, corrective pullback, bosh. Buy, take out the previous high, completely U-shape, but then extend. And then if we see divergence, that's your time to get out. And these setups, you can trade these setups on pretty much any time frame. I'd still stick to using the higher time frames because it just gives you more of a range. On the smaller time frames, it happens, but it happens too fast, and the range is probably good for a scalp, like maybe 10 pips, 15 pips. It just depends. Depends what you're trading. But go along here, pull back, correction, bosh, break. T1's up here. Test the previous high and then break up, extend to the 127, somewhere up there. And then with divergence, it just, beautiful actually. It's come off the high. So why is my target down at 300? Because 31,288 is the previous structure low. So 12 pips above that. Looking for 300, it just makes sense, and now we're going for it, and so yeah, we're gonna have a go. Come on, baby. I'll take some more off. Manage the stop loss down to 300. Let's see if we can get down to 300 on Dow. Just keep dragging that stop loss down. And trying to tear on down through the EMA. Come on. Just adjust the stop loss to break even. There we go. And the reason I'm adjusting the stop loss is because obviously we have previous structure on the smaller time frame. Now, what did I say to you all before about that 764 and the significance of it? So the significance of the 764 is where we have the trend change. So you can see here a prime example, fantastic example of why that 76.4 is so relevant and so powerful and so important. Tested it multiple times, a fourth time in fact. So we want to use things, some support and resistance, and look for at least two points of contact. Okay, so 2 points of contact. In this case, it does it for a third time. So we look for the third attempt to actually break. Didn't break. It was a London session. Didn't break. at 8 o'clock as London opened, we had a reversal, everything went up, off support, triple bottom, makes sense, fine. Allow it, didn't break the high, still stayed in this range, telling us this is still very much bearish, great, stops just above here, we've gotten in up here, gotten some profit off this move, and so we, once we know that we're in a bearish trend, what do? We just look for, just to sell the pullbacks, right? We just want to short, every time it goes up, we want to short it. It makes our life so much easier. The trend is your friend. And what do you do with your stop loss? Well, you just put them above your highs, your previous swing highs. In some cases, like with this, here now, I've just been stopped out at break even on one position I just had. Fine, but I just took it down to here and took some off at the previous low. Sometimes it wants to mess about, it'll do that and then it'll confirm and keep going down, maybe, but it's just a bit choppy. So we don't take any risks beyond that, because it could actually be a trend change and go up 200 pips to the upside, or completely take out all of this now it's done that pullback. And I just highlighted price action here with regards to, this whole move. So we've gone here, then down, liquidity grab, and then bosh, goes up, hits the previous high, goes up, extends. So now we're coming down to test this area. It can find some structural support anywhere around here, and it may drag its heels to the downside. Why? Because overall, stock markets are bullish, aren't they? They've been in this very buoyant uptrend, and so it's a counter trend move on the bigger picture. Okay, on an intraday point of view, it's done what it needed to do to the downside, and we've been able to come in and establish that this was a bearish bias. And so with bearish bias, because it's such a nice move, we can get on this and exploit it. It's broken out of the previous structural support, which is now acting as strong resistance. So where's that resistance? Around 436. So you're saying 430, which is just coming up now to test. It's going to come back up and retest that area. If it breaks above that, then again, we're using the 764 line significantly to tell us, is this bullish or bearish? Above it, we start looking at bullish bias, bullish sentiment. Below it, we maintain a bearish stance. So it's really cool. That's the beautiful thing about these fib levels. They just provide such clarity and on-point analysis, because you are literally drawing a line in the sand. You're saying if it crosses that line, it's bullish. If it stays below, it's bearish. So for me, I can scalp these moves and get like 30, 40, 50 pips in a heartbeat because it moves. Yes, Jason, you may ask a question like I ever stop you. What's up, mate? Is it a real question, or is it one of these sarky, funny comments? Okay, I think we're done anyway. We are done. So thanks everyone for joining us, and yeah, all good.
Thanks again, Alex, for the live session.
Thank you, Alex. Thanks a lot.
Do you find you have jaw ache after live? Not really, mate. We're in a lockdown. I've got nobody to talk to but you lot. So I've done my talking for the day in a space of an hour. You see, you knew he was going to ask a dumb question.
Wait, so if the lockdown is over, Alex, you're gone as well? Like, there are no more lives?
Do you know what? I can't wait to get out of here, to be honest. It's like being in a cage. It is what it is, right? But thankfully we have spring on the way, warmer climates, no doubt. If they can ease the lockdown, if I won't go anywhere or travel anywhere until such time that we actually see some less restrictions. But that's all to come, isn't it? We've got a lot to look forward to. So let's just keep ploughing away. Let's make some money trading. Let's save some pennies, and then we've got some money to spend when it's time. So you can actually use this time productively. All right, thanks everyone, and have a good day. Enjoy the rest of your day. If you guys need me for anything, please send me a message if you're having any issues. Cheers. Bye for now.
Cheers.
You can ask it now. You can just send me the message. You don't need to send me a Telegram DM. Oh, you sent me some. Oh yeah, I see that now. I'm going to plough through them. I've got a few here. I'll check my messages now. Thanks everyone. watch this video recording back and see if you can pick out some decent